Hey everybody, this is Dennis Wilburn, the Active Trend Trader. I want to welcome you to the this tutorial. This is the second part tutorial on the ThinkorSwim on-demand simulator. You can basically, if you haven't seen part one, where I talk about how to use a simulator to trade stocks and ETFs, you can basically find that on our YouTube channel. And if you haven't subscribed to YouTube, please hit the subscribe button and the bell to be notified when we do post new stuff. Please forgive me for not getting part two up, which is options, as quickly as I wanted to. I had a slight run-in with the COVID virus, but thank goodness and thank God for a proactive doctor who got us onto some of the off-label treatments, and bingo bango, within just a couple of days we were back to normal, and I'm actually back to running now, even though we were diagnosed at the beginning of August. And so again, thank you. If you knew about it, thank you for your prayers and your concern. We are, like I said, back to normal. Thank God there was other alternatives, and that's one of the things. And I also want to say thanks to my wife. Why is that? Because my wife is the one who did all the research and all the great work that she did on, so we'd have a plan. We had a plan in place, and it worked very, very well. So let's go ahead and jump into today's session with no further ado. As I've shared with you before, I am a former naval aviator, and simulation of flight conditions and simulating how to fly for emergencies and all that type of stuff was very much a huge part of what we did with our when I was flying. The one of the things that I also remind you of is, Mark Minervini, he talks a little bit about simulation. He talks about, find a simulator that will, come as close as possible to actual conditions. Now, the ThinkorSwim on-demand simulator is not absolutely perfect. I will go through a couple of the quirks because when I did convert over to trading the options, there's a couple more quirks you got to take into consideration. So let's jump into today's session. Part two, options. As I reminded you, basically simulations lead to safer flights when we were flying. This is a squadron I used to fly with, VA-25, VFA-25 now, out of Lemoore, California. Well, where do we get that? We spent hours in simulators, basically just flying around, and nothing as fancy as this particular simulator, but it helped us handle emergency situations. It helped us basically be able to just get to the basic initial hands-on piece of flying the aircraft without having to actually fly a multi-million-dollar aircraft to begin with. And so it was a cost-effective way to teach us how to fly it without us having to worry about running into the ground. So we'd spend 2 to 3 hours for every hour we spent in the actual aircraft. And I've already covered the why we did that. And so with that in mind, well, what do you think the heck we should do with simulating trades? What's just as important as trading the, it's just as important as trading the, both of the simulations are very equally important. What I'm trying to say is that simulating and trading prepares you so that you, one, make fewer mistakes when you actually start trading real money. It's a lot easier to reset your, account balance when you're using a simulator than it is to try to reset your account balance when you're really actually using real money. So a couple of factors I want to be taking a look at. One, important factors. Keep it simple. We're just going to work on the basics. I'm not going to get any option spreads or like that. We're going to be basically focusing on one thing. And what is that one thing? We're going to be focused on calls, bullish type positions. And so what are the factors that I need to be aware of in doing this? I need to be aware of time to expiration. I want to be aware of delta, which is the how much the price of the option moves for every dollar move of the underlying stock or ETF. I want to be aware of implied volatility. Implied volatility is a very significant thing when you're trading specifically stocks, less so if I focus on trading the index ETF or even some sector ETFs. I want to pay attention to the open interest. Why is that? Open interest tends to, if open interest is large, it tends to keep the price, the spread between the bid and the ask on the options low. And so I'm looking to, when I'm learning how to do this, and this is something that I potentially suggest to everybody, is go ahead and learn how to trade. There we go. Go ahead and learn how to trade utilizing what? Utilizing the index ETFs. It's a great place to start. It's a great place to learn. In reality, to make money in the market, make big money in the market, you don't have to get away from just trading those options. There's a lot less variables to be considered and concerned with. So how to pick the strategy? Well, what do we want to do there? One, while option strategies like spreads and other things we can set those up on the on-demand system, they're a little bit more challenging. And so when you're first getting started, don't mess with the spreads. Don't mess with the other exotic type of option trades that you can do, but it's a pain in the butt to set up on demand. Keep it simple. Initially, just going to buy calls with high probability setups based on the active trend trading system. And that's what I find most advantageous to learning, because it'll get you into the basically internals of your trading platform. And so it won't be new when it's actually time for you to do a trade. It will not be something new. I will basically look to simulate my trades off of an index ETFs. That is either one that emulates the S&P, the NASDAQ, or the Russell. Today we're going to be doing the Russell. Quirks. The quirks in the system with on-demand is you just can't put an order in there, expect it to fill. It basically, it's really quirky. Sometimes that works, sometimes it doesn't work. And so what I've found, my workaround on that, is I look towards the last 10 minutes of the day to actually put my order in. And a lot of times it is a straight market order, although I will try to fudge and hedge in between the bid and ask. We'll show you how to do that here shortly. Secondly is I don't go back more than 10 years. The option data becomes kind of sketchy at best, and it makes it more challenging, to basically get the fills. Trust me, if you're going in today's session, I'm going to be going to 2015. 2015 worked great. I would push it back to no further back than where 2022 right now. Not 2022, but 2012. It gives you 10 years worth of data to work across. Let's go ahead and go to, as I said, learning trading option on index sectors ETFs. It's a great place to stop. So the sector ETFs are, as we've seen, the spiders, the Qs, and IWM. I also will take a look for my own trading, because this here is my leveraged ETF stock ETFs that I utilize for the AutoPilot trading system with the active trend trading. Is XBI, which is biotech, SMH, which is semis, XLF, which is financials, and XOP, oil and gas exploration. Why do I like these particular these particular entities to do options off on? Typically because my strike prices, I have somewhere between $1 and 50-cent strike prices. So if I'm trading live, it basically limits my exposure, but I still get the to have the exposure for learning purposes, but I'm limiting my downside. Narrow bid ask, that's what I'm talking about. We have sometimes somewhere between a nickel to a dime. That's all that's there. So the market maker isn't making a lot of money off of you between the bid and ask. Some of the larger stocks and that kind of stuff, they'll have a spread on the bid ask, 50 cents, $1, $2. That's, as I like to say in California, that's no bueno, no bueno. What else we got? Excellent training ground to trade higher price entities or generate weekly, monthly options. Great for building account size quickly if you follow the rules. Just one of the things. If you follow the rules. I'll lay out some fairly simple rules to follow that I do with the simulated trades, but we'll work on that from there. So let's see what else next. Here's one of the things you can fill out. I tried to do by directional. I'm starting to lay out my simple rules here. Buy an option that's 2 to 6 weeks remaining until expiration with a delta of 60 to 70. I'll go down to a delta of 50, and that's fine. And then I will lay out a grid here. Basically, this is my order grid to say, okay, if I'm going to jump onto, like in this case, IWM, the strike price is 216. I could get in it for 445, and I'll lay out where's my price, where's my stop loss, where's my tech stop loss, where are my profit targets. I want to lay those out also, and then what I'll do is I'll look to, I define my price for entry trigger. I use a 30 to 70% stop loss. However, I take all my trades during the last 10 minutes of the trading day. Again, that is a function of utilizing an on-demand simulator. And then, because if you want to learn how to trade some options, I'm going to be doing some training on that in the near future. So profit targets are underlying price targets or we'll get into that shortly. So I prefer the close prior to expiration day. The rule I'm going to be utilizing there is we will close all trades the Wednesday before expiration. So here are the rest of the rules. 1, I want to use a defined trigger setup. I'll be looking primarily at pullbacks into moving averages, pullbacks into strong support. I will trade during the last hour of the day. Notice I put in parentheses the last 10 minutes of the day. I found that works fairly well with the, but it is a limitation of the on-demand system. I want to look for active trend trading setups. My stops are executed during the last hour of the day or the last 10 minutes of the day. Also, again, that's a limitation on demand. I will trade directionally. I will buy options with a 2 to 6 week remaining until expiration. Delta 50 to 70. I want to know my implied volatility and my expected move. Now, with the on-demand system, it doesn't give me those numbers, so I have to estimate it. I'll show you how to estimate what those expected moves are, and then the implied volatility. One thing about it is, in practicing on the The index ETFs, the implied volatility changes very little. So I really don't have to worry about that a lot, but I want to know what my expected move is. Stop loss 30 to 70%, or a close below strong support, either or. The fact on, and this is developing some good habits if you're trading options, is one of the biggest points of losing trading option is just to let your options go. And there's no reason for that, because options can get going in the wrong direction and they can wind up being worth zero. You've lost all your capital. So if you're trading and you're using a stop loss of somewhere between 30 to 70% or a close below strong support, at least you're pulling out some of your capital. There is no logical reason to let your hard-earned capital and hard-earned profits go to zero trading options. Profit targets are at either underlying stock ETF price targets. We want to be strict on that. The other criteria, and I really like this criteria, folks, is use a time criteria. If I am within the first half of the expiration period, in other words, let's say I have 3 weeks, and I've gone through a week and a half of the time period, and I'm already up 50%, take at least half the profits off the table. In other words, just sell the darn thing. And then what else do we want to do on that? Is once I've sold it, I move my trailing stop up to where it will be on the remaining half, somewhere between 10 to 20% gain. So in other words, I'm willing to give up about up to 30 to 40% of what I'd already gained. Well, actually, it's a little bit more than that. It'd be more like about 60 to 80% of the gain itself, but I'm still getting out profitable. And then last but not least, I exit on the Wednesday before expiration. That's if I haven't triggered my loss. So you guys ready to jump in, and let's see what the next slide says, because I know I'm going to have to say something about this. Is one, no representations is being made that any account will or is likely to achieve profit or loss similar to those shown in this simulation. All materials presented are for training purposes only. Traders should only paper trade any method prior to the risk of their prior to the risk of personal capital. And so what happens next? So let's jump over to the slides, and we'll start building what we're looking at. Now, one of the things I had mentioned is that we want to know what the implied volatility is. This is what now I've already gone forward to where I want to be. I want to be in the first week in May 2015. I've already clicked the on demand, and just as a reminder, if you're in the demand program, you basically want to close the section over here, and it makes then demand pop up. And then I click that, and that would take me out of the demand feature on the chart. So let's go ahead and then jump over to the there next. Now the other thing I wanted to show you is, let's take a look. This is the on demand. There is something missing over here. What is it? It's the expected move and the implied volatility. Let me show you what that looks like. So and that looks like this. Here is, and this is live because I'm recording this the next to the last week in August 2021. Excuse me. And so here are the implied volatility and the expected move of the underlying between now and when expiration. now an expiration. So if I'm looking out anywhere from 3 weeks, so that would be 1, 2, 3, there's 3 weeks. That shows me my implied volatility is about 23%. That's not going to change a lot with the indexes, the index ETFs. That's not, and their options. Not going to change a lot. As you can see, as it goes up and down the line, not going to change a lot. But if I go out $9 plus or minus $9 is the expected move. I want to write that down and just keep aware of it, because I would like to put an alert. You know, let's say the price of, like in this particular case, in this example, the price or the last price on the IWM was at 219.62. Well, according to the expected move is $9.16. Divide that in 2, add that to that number right there, and put an alert there. If prices get to that point and it alerts, I want to be aware of that so I can, you know, that gives me the decision points. Now, if you can't watch the market during the day, then you're not going to be able to turn it back on, but at least you'll have a, you know, alert email that was sent to you that says, hey, I hit the halfway point on my, so that means I am definitely profitable in that position. And I know I want to check it out last thing of the day, you know, the last 10 minutes of the day. Go ahead and get rid of that. So that's what those are for. And if I go then out 6 weeks, which in this case turns out to be about 6 weeks from where we are right now. It's 1, 2, 3, 10, 1, 2, 3, $14, plus or minus $14 to get all the way up to the next level. And so if I was building a position today, those would be the numbers I want to be looking at. One of the things I want to do in looking at how to do this, let's go ahead and do an example today on doing the trades. We want to do an example with utilizing the, I want to say 29 May, which from where, well, let me roll this forward a little bit. Okay, we're going to roll this forward to, and you know, since I've already looked at this particular trade, I know where I want it rolled forward to, and I think it's the 7th. There we go, the 7th. And the way I have this set up, folks, is I have it set up where on my time, I have it set at East Coast Standard Time, just simply because, to keep it simple. We know the market closes at 4 o'clock in the afternoon, East Coast Central Time, and even though I'm trading in Hawaii, that's okay. I want to keep it simple for everybody. So the other thing I do is I make it, as you can see, 15:50. That is 3:50 in the afternoon. And when it goes to that day, like it is already done, I don't have any of the play buttons clicked. Those are turned off. So I want to, let's take a look at the chart. There we go. And here's IWM, and it's settling in. And as you can see here, let me blow this up a little bit because we'll make it a little bit where you can see it a little bit better. So the question is do we have a signal? And the fact of the matter is we had a hammer yesterday. We have a DSI crossing up, very strong signal today. Now, because of now if I were doing this, you know, I may put in a conditional order if I was doing this on my live program, but since I'm not doing it on my live program, I can't do a conditional order. So what we do want to do is we want to place the order to fire off, or basically at the end of the day. So as you can see, hammer, yes. Price action went above, yes. Let's go ahead and open a position. Now, here's one of the things I want to do is I want to go to both a go back. There we go. So as you can see, I want to go forward 3 weeks. And since that's like we're on a Thursday or a Friday, I have 1 day left. So that one's gone. So I go 1, 2, 3. So the strike prices on May 29th, those are the ones I'm interested. I go forward 3 more weeks. 1, 2, 3. The 29th, the 19th. Now, in practicing, now you don't have to do this exactly like this, but it gives you a really good flavor for what, and also in the individual ETFs that we're looking at, it gives you a good flavor for what it's like to actually buy the position. And so it gives you a good flavor for that. So we're going to utilize June 19th. And on the June 19th, I'm going to go at the 50 delta, or as close to it as I can possibly get. The other thing I want to do is, as I'm looking at this, since I do not have a implied volatility and or plus or minus move, my estimate is going to be $8.88 plus or minus on June 19th. And then I'm going to also buy a at the money on May 29th. The options expire May 29th. My plus or minus move on that is $6. $6. The other thing I want to do is go up here to, excuse me, go up here to this little factor. No, that's not it. Yes, it is. I'm sorry. What am I looking for? I'm looking for this one right here. There we go. Sorry about that. Many little boxes with dates in it. As you can see, the Theo price right now is set to whatever today is. So I have to go in and modify that if I'm going to utilize Theo price. So what does that look like? You open it up, go to your calendar, go back in time. And again, I'm going to go back to May 7th of what? 2015. Shot it a little bit. There we go. May 7th. And then what that does is it pulls in the price action to be between the bid and the ask. Now, what am I sitting at? I'm sitting at $121.72. I come down here to the to my bid ask, or basically my strike price, and the 122 is 0.5. I want to go back up to the 29. Now at 29, do I have a 122? Yes, I do. It's in at 49. Close enough to be able to work this trade. I want to compare, since I want to do a comparison, I will do a 10 contract price at 122. So 10 of those, and that will be if I fill at 2,700, let's say I fill halfway in between here. And this is one of the areas where I will, in fact, I left click here. That brings up my, where I want to enter. I will go partly between the bid and the ask, but I want 10 of these. Now, if when you change the quantity, this goes to NA, it's not going to fill for you. That's the way it is. So again, my price action isn't moving, but I can just send this, confirm and send. Did it fill? The ring of the bell says, yes, it did. Now, what's my next So I am currently invested at 122 level here, and I got in at 272, right? 272, so that's 2720. That is the number of my value that I have invested. I want to invest about the same amount. So I go back here, I go to 122, but as you can see, 122 is only going for 183 to 190. Oh, don't do that. 183 to 187. So let's see, I can get in at 186. I'm not going to try to fudge this totally one half of the way, because I had the program blow up on me when I would do that. I don't want that to happen. So if I let's say I can get in at $1.86, but I'm going to be doing $2,720. That's how much I can invest. Divide 1.86. So that tells me I can buy, if I was doing shares, it would be 14, so that tells me I can buy basically 14 contracts. It's 14 contracts, and it will equate to approximately the same amount. So now let's go here. And what did I say? I was going to basically do 14 contracts. Nothing's fudging on me here. Everything is good. What am I going to do? I'm going to try to get it for 186. $186. And so let's confirm and send. Bling. Okay, we're in both positions now. Now what I want to do, this is what is, not that I want to do it, but you need to do it, because one of the other quirks with the on-demand system is it doesn't add things up totally accurately all the time. So I want to run a secondary tracker, if you will, and I just use my regular tracker because I can run it for on demand. I can do it both strategy one, which is buying the stocks, buying the ETF, and then doing the options. And so for this particular trade, what did we have? A little bit different before, so that's all right. So we did the what? 122s? 122. 122. Calls. There we go. What was my entry price on the long term? $2.72. And for right now, we don't actually have an exit price, so I'll just put in there 272. How many shares, how many contracts did I buy? 10. Bingo. Now, as you can see over here, and the way this fills out the rest of the way, let me see if I can all the way across, is what you can see is I show 6/19 as my expiration date, corresponding to the same time frame of the expiration date on the option itself. Now, what about the second order? We got in at 186. Now I'll go ahead and I'll modify that and put 186 there also. How many contracts did we do on this one? 14, right? And as you can see, it comes out fairly close. And what I'm looking at is basically this extends across. And what is my delta on both of these? 0.5 for right now. 0.5, 0.5. Whoops. 0.5, 0.5. Now, some of the other information that this, in fact, does provide me is, where's my halfway mark? Because you remember, as per the rules, if I reach halfway, I want to be aware of what those are. So on my upper position, if during the first half of the period, which it would be about 22 days. So in other words, about 10 days from now, I want to know how close I am to 50%. But I also want to monitor it along the way, because if it gets up to 50%, when I take a look at it at the end of the day, I'm going to do what? I'm going to close the darn trade. Part of it, 50% of the trade. It's the way we'll approach this. And on the second one, 408. So I'm just going to put here 279. That's 50%, and then 408. Now, normally, I would put those in as conditional orders to the regular trade platform. However, it doesn't work that well for on demand, and part of the reason is just when the darn things trigger. So now that we've done that, now we're ready to start rolling the. I'm going to go down a little bit. I'm going to put this down. 50. I think that should do. And nice. There we go. Yeah, now we can watch both of those. I'll go down a little bit more. Go to 12. Gonna be able to see 12. Yeah, we are for the time being. So here I have my 29th there, and I have my 19th there. Let's just let me double check one thing to make sure I am in sync. Yep, 29th and the other, and we have the 122. Everything's good. So now how do I click my way through this and also monitor it? And now where's my stop loss? That's the other great question. My stop loss I would put it down to about 60%, and or initially start off on, I would be looking at a stop loss if I came back down here towards the 120 level and it broke out the bottom of that. That would be my initial stop loss. Okay, let's go ahead and start working through the puzzle. And this is the fun part here. Okay, I go up here to my on-demand feature, and I go, let's go to the 8th. Go. Now, as you can see, it says up here in the left-hand corner, it's rebuffering. It's readjusting itself. And so we see it pretty soon. You will see that it will come down to how much. And so the next day we go up $1. We go up $1. Now remember, as you're doing your option trades, that when you try to sell your option trades, typically the market maker is going to want you to sell at the bid, Now, we're going to try to go in between the bid and the ask. That's one thing nice about the ThinkorSwim platform. They really work hard for you to get you filled somewhere between the two numbers. Again, bid ask, only it's kind of interesting here. And here's part of the thing. Notice the volume here, the open interest, 25,000 contracts, 171 up here, 171 on this weekly option up here. This is one of the monthly options. Its expiration. So let's go ahead and so we've got 210 and 306. Now, if you want to, you can go ahead and roll those over and place them at the end of the day, place them, okay, where are we doing? How are we doing? And again, this is up to 210, which is a 12% gain. Not too bad. And the other one, 3.06, which is a little bit over a 12% gain. Interesting, huh? How the two simulate each other very, very nicely. What does this tell me? Now, how far am I away from my 50% gain on the top one? Remember, 279. So now I go ahead and what's next? We basically go through to the next day. And what I want to do is I want to show you on the chart for the next day. Now, the next day is a Saturday. Don't do that. So we go over here to the 11th. Go. Now, what I'll do is I'll bring up the chart on this so you can watch it do its iterations here. And what you'll see is there's the 11th. And throughout the day, or through the end, during this process, this value on the 11 will bounce up and down significantly until it finally settles out at where? 122.88 or 122.86. One thing I can do is I can bounce over here to my charts. And hopefully this will just be a daily chart. Is it? No, of course not. There we go. We'll rip it over here to a daily chart. So you can watch that. So as you can see, really, it's doing fine. We've pulled back up. What are the values today? And so what are the values today? Now I'm up to 211 and I'm up to 307. Have I hit my 50% profit targets? No, I have not. So again, then I start just ticking through again. What's the next stopping point? Now what I can do here is, if you want to accelerate the process, because if I go to the next day, although this is, the simulation is much more rapid than waiting for, live simulations to happen. And as you can see, I went to the next day. We're waiting for the pause. It shows that we came down about 15 cents. One of the other things I want to show you is up here in the value. That's when it shows the value of my account. Now, part of the situation is the thing that I'm tracking on my spreadsheet doesn't take into consideration the commissions. So that's one of the reasons why you have a little bit different amount on each one. But again, it seems to have no rhyme, no reason. So do I need to be concerned about trying to get out, adjusting anything? And the answer to that is no. Although we came down, flashed down here. Did we get close to this? Yes, we did. But it didn't take out my stop loss. So excellent. So as you can see, it's still settling in, because my final price was 122.56. And so on the charts, haven't actually got there yet, but we're pretty darn close. Excuse me. And when it finally gets down, and one of the things that if you want to speed up your on-demand simulator, is what you can do is just eliminate the weekly and the intraday charts and just use one chart, and it speeds up the process a little bit, because this will go bouncing back and forth significantly here for a while. So what is I go back and I just double check, have I dropped down, and no, I have not. I'm fine. I haven't hit my stop loss. So now let's go ahead and go through to the next day. And as I was saying, is one of the things I can do as I can jump forward 2 days at a time. Now, if I jump up 2 days in a row, as you can see, I hit 240 here. The other thing I need to do, of course, as I'm rolling ahead, I also need to be, where did I roll ahead to? 414. I also need to be moving my theoretical price. Where do I need to move it to? The 14th. Now, here's where I need to, so I jump 2 days ahead. I need to look at the chart. What happened in the day? Well, I thought I jumped 2 days ahead. No, I guess I just jumped 1 day. Or what was that? That was the 12th. Oh, okay. The difference was a weekend, I think. No, it wasn't. It is still pausing. Let's see. Let's go back over here and look over here. As you can see, I have gone up now as it is working its way back through. Let me take a look right here real quick. Now I jumped to, and so when you see that, you see the, I want to show you what's going on here, is it initially missed this day when it was compiling the data, and that's why you have to wait until you've actually got. Now I have the actual timing. Price action IWM jumped to 123.59 to 123.60. Now I go back, what is my trades? And I go in and I look at, okay, 240, 240. Go back to my spreadsheet. So 240 was 240, 50%. No, it's not, but it's getting close. What about on the, excuse me, on the, this one here? I've got 329. What, you know, did that reach it? And the answer to that is no, it did not. 329. But it is moving, you know, again, it's moving in the right direction. And what was my, yeah, 408 on that. So again, when I close out, how am I going to close out? That's the other question. And what I can do is I can basically say, hey, if I hit that, I'm going to close half that position. So 7, you know, that's part of what you got to decide when you're working in, going into this, 7 and 5 on the trade. So let's go ahead and go, let's jump forward in space. Now with the, I'll do the chart real quick. This is a very bullish looking chart. So it looks like it may fly from here. So now I'm going to start walking through one day at a time. Go to the 15th. What do we have on the 15th? And at first blush on the 15th, we've done nothing but come up into Friday's level. We know that that will not modify the, option prices. So now I want to jump out to the 18th. And what's that give us? So the 18th, let this go ahead and settle out. As you can see with the 18th, I jump up to $125. I'm still waiting for the on-demand simulator to complete, actually on the 15th. And it will complete and pop over. And I'll just leave that on for a little second so you can see it when it does finish and go to the next level, because I want it on the 18th. And sometimes what you need to do is when I've got it there, but it's not, it's like it's kind of delayed in going, I'll go back and reselect it. And look what happens. It better move. Aha. Pow, we get the big move. So now at the end of the day, it's 125.02. Go to my trade box. Now, this is what I was talking about, the NAs. When these NAs show up, there's not a darn thing you can do about it. And so hopefully that will come back and kick back into place. I can go back and try to reset them. But as long as the NAs are showing up, it will not allow me to finish this trade off. And again, that's one of the quirks, and it's one of the drawbacks of the simulator. I can also try, let's go back. I can also go forward one day and see if it does the same thing to me. Okay, now the second time through, it is filling in So now I will go backwards to the 18th. I know this is kind of a back-assward way of trying to get to where we want to go. But as you can see, now on the 18th, it is showing me what my prices are. Now, in a way, I'm kind of glad that that showed that when I'm doing this demonstration, because it showed us how we can work through it. So that's all positive. So let's go ahead and just double check. Did we hit our 50% mark? We had 279. Excellent. What price did we hit? We hit 332. So where do we want to trade? I'm going to try to close that out in between those. Again, I'm not going to go all the way to halfway, which would be I'm not going to go to halfway, which would be there you go, 339. But I'll go up, in this particular case, yeah, I'll go up 335. So how many of those do I want to close? 7, correct? So let's go ahead and close 7 of them. And the way I got to that, just to show you, let me go back to that a second ago, is I left click on the bid, and that pulls up the price to sell the bid ask. I modify my price to 7. And what was I going to go here? I'm going to try to get 335 for it. Let's see if that sets. Bingo. We have 335. What I'll do now is I will remember that 335, and I make a note to myself on my scratch pad, and I want to run over to how much is the value of the 122 June 19th. As you can see, it's 411. Is that halfway? And the answer to that question is yes, it is. So I can also close half of that. And so I will try to close half of that. And we will balance this out in a moment. I will try to close half of that at, I'm going to say 411.17. And this is another thing that is really realistic with the on-demand, is when I'm trading options, I'm trying to get a fill somewhere between the bid and the ask. How many I'm going to trade? I'm going to sell 5 of them. I'm going to try to sell them at 415. Let's see how that works. Aha, 415. That's great. Now I go back to my spreadsheet, and I will just put in here, what was that, 335? And as you can see, that 335 actually gave me an 80% gain on the on the 29 May option. So I copy that. I paste it down here in this close position. And what I want to do is insert, how many? 7 of them. 7 of them. What date? Well, that was 5/18, was it not? I think that was 5/18. 5/18. And on the 15th. So that's excellent. What's the other point? Now we know that was almost exactly, there's 11 days, almost exactly to the halfway point. Because what was our halfway point, if you remember? 11 days. Now what about the second one? Let's grab that. And we closed that at 415. $4.15. We hit, as you can see, slightly below the 80, which is okay. We closed 5 of those. I get a copy, bring it back down to here. I insert it. There we go. It's 518. And that would be 5. That would be 5 of those. So now I have get a and that's 7, and that's 5. And as you can see, my profit so far per my spreadsheet is $3,500. My profit per ThinkorSwim is 3,752. The difference is somewhere in the bid ask, how they've got that tweaked around. That's all I can figure at this particular point. So that brings me halfway to closing out the positions, folks. Now, what I would be doing is the first trade was on what? May 19th. No, June 19th. Excuse me. May 29th. So what I'll do is I'll just jump forward to, and I want to see what's going to happen, because I know I want to close this on May 20 or on the 27th. I will go ahead and jump forward to the 27th, hit the go button, and then wait for everything to fill in. Go look at my chart. And I'll see the chart hasn't taken off yet. It's still showing. Oh, yes, it's the 27th right there. Oh, okay, good. Good. Now, we never got down to close to be able to take out, the, but since that is the next time to close this position out, the Wednesday, I would be closing out which one? The one that expires on the 29th. Let's go ahead and let that settle out a little bit more. Go over to the trades aspect. And as you can see, the price, that was on the 27th. And as by that time, you have very little time value in that. And so that's why I want to close by the Wednesday prior to option expiration. So is that settled out enough? I think it has. That gives me a 271. I'll try to split that, go up to 274 to close out the remaining 7 contracts. Excuse me. And what I say, I want to go 274. See if we can squeeze that in. Go ahead and hit the go button. And see, it didn't. So I may have had that too. As you see, it did not close. So what I will need to do then is I need to go back here and cancel and replace the order. Now again, this may not close for me, but I'll get it back down to about the 272 level. Let's see if it'll function for me this time. There we go. So we close it at 273, $273 on the last part, or $2.73. Pull back up. Now this shows that I'm up at 29. Go back to the spreadsheet. Now that closes out the second piece of this. Now is at $2.73. As you can see, that's dropped back down. Now my stop loss at the close, if it dropped down to 10 or 20% of my entry level, I would have gotten out. So now we've got this. This is 527. We pull that out. I can now translate the copy of this. bring it down and place it here. And I go ahead and up here because I'll be using these again in another session, and I will just zero those out. So it's not counted up here. So as you can see, I've got $2,937, and down here I've got $3,082. But part of the reason may be on that, I can now close this because that should be gone. So I'm sitting at 358, and just let me put in 358 here. 358, 3.58, and yeah, 2,500. This is showing me that I have 2,900. Again, how they do their calculation, I don't know, but as long as I'm tracking on both of them, I know that, hey, this has been a profitable trade. I'm good with that. So that one is closed down. Now we go back, and now what should have happened is now we start working up towards on the June 19th. And what we should find is on June 19th, well, hold on a second. I got to check one thing. And what I have to check is I should actually be out of oh, come on. Don't freeze on me. Okay, that's showing that I just have one on that 29 October. So I don't know how I came up with that extra one. That's odd. But let me go ahead and I'll close that out. It was probably a fat finger on my part because I thought I had 7 and 7. And I did close 7. So that's odd that I'm still showing up, but let's go ahead and just create closing order. And again, doing the accounting on this is kind of a little bit of a pain because you never know how exactly it's going to function out. So I'm going to go ahead and see if I can close that there. It is, and now it's zipped out of there. Now we're closer to that. And so then I basically go through and I do the same darn thing with the rest of the entity. When is my next expiration date? Is out here in June 19th. I can trade this in a couple of different ways. Is rather than go, now I can start going, well, let's go to the 5th of June. And let's go to my chart. So you can see with the 5th of June, is it still trading up? Or have we crossed down below where we would get stopped out? No. So we just continue to watch that. Now we go on out to I go out to the next week, the 12th. What happens there? Now, ultimately, my mid-range target also is if I get up to the upper Keltner channel, I want to be taking off some additional profits. So we started to push higher. This was where we were last week. Here's where we are this week. What is it's $4. And so as you can see, we're not making a lot of headway because what was our entry level on? It was at $272, so we're at $4. Excuse me. That's not. Yeah, because the first time we got out of that, we got out of it at $4.11, I think. So we're at $4. We're back to $4. Up here, this is what the position that's still open, and as you can see, it's pretty darn close, 29.82, and then I just work it out, and I continue to work it out So I expire here on the 19th. So let's go to Wednesday. And again, it doesn't have to be a click through day by day. However, if I click through and I find that, so what did that do for us? Okay, we continue to push on up, set a new high. So here's the here's the 17th. I go to my my trade box. Give me 15 of these puppies. Give me 17 of these puppies. Give me 18 of these puppies. There we go. As you can see, price action got up to 420. We're also making a new high. So that is the Wednesday. So what is the rule? Wednesday before expiration comes, I go ahead and I close the position out. Excuse me. At what? We've got basically, open this up. And one thing I wanted to let you see, the reason I keep adjusting my Theo price is it brings this Theo price here into a line. So I've got 422, I've got 448. Where do I want to try to get out? I'll try to get out at 430. 430. And how many do I have to trade? I have 5 to trade. 430. And we have to see what the system will let us do. It will let us do that. It did. And so now we are, darn it, said we sold 6. So now I got to go back and just close that position there. Closing position is that. And I'm going to just try to buy that back at 434. And this is also instructive to you because if, it's better to do your fat finger mistakes. Like I've done 2 in the last 2 trades. There we go. It's gone. I've done 2 in the last 2 trades. That was, let me get out of that. I've done, a couple at the last 2 trades, and it's a great thing to get it out of the way when you're doing the simulation trade on that. And what do we get out of that? We got out of that at $4.30, and so now I can go back and do my math. That's the other thing that this really helps with. You have to go back and do my math. 430. What day? And I will go ahead and grab that and transport it down to copy, paste. Change the date. 6/17/515. Change these numbers up here so that it will not count in my total. And as you can see, in my total, I have, per my spreadsheet, $3,100.32. However, my profit I'm showing on the virtual on-demand account, I'm showing $3,312. But again, you've worked through the process, and that's basically, covers everything I wanted to be able to show you. It's a matter of just working through the process, and then you go and do it again, you do it again, and make it as lifelike as possible. That's why I pull up this. So I'm tracking I pull up, what else did I pull up? I pull up, I will fill this out if I'm going to be working on it. Because in reality, I'm not going to be working two positions at the same time. I just wanted to give you a flavor for what it would be like. Same strike price, basically same delta, with what you get if we buy 3 additional weeks. So I would normally just do one of these, but it gives you the practice of what's going to happen. Also teaches patience towards, because you have to wait to the system or the on-demand feature to work its way through the numbers. And then, so that's it. So how did we do? Well, as you can see on the shorter time frame, the 29 May trade, we actually generated a profit of about $1,600. The longer term trade, we only generated about $1,400. Where the longer term buying the 19 June trade would have worked out for us better is if price actions would have blown on through the values and gone up through the Keltner channels and went on a mad tear. Didn't happen. And you know what? That's fine. This got us into practicing how to trade the options. And so I hope you learned a lot. And again, hey, thank you for joining us today for the on-demand tutorial. I also want to just remind you that if you're looking for a place to find the greatest stocks and ETFs to trade that have a really wonderful track record, you need to be checking out the Active Trend Trading's AutoPilot Trading System. 7 setups with potential trades every week. Aloha.